Welcome to The Explainer. Every year the entire financial world kind of holds its breath for one report in particular, and that's JP Morgan's Market Outlook. So today we're going to break down their 2026 playbook. We're going to find out exactly what one of the world's biggest banks thinks is coming around the corner. So this is the actual title of their report, and honestly, it just nails the core idea. JP Morgan is basically saying, yeah, there are opportunities for growth, but you've got to navigate some serious risks. You can think of it like a green light to go, but there's a huge yellow caution sign flashing right next to it. All right, here's how we're going to tackle this. We'll start with a big picture forecast, then we'll look at the good news, the bull case, and then the bad news, the bear case. After that, we'll dive into their recommended investment themes, and then we'll wrap it all up with the big takeaway for you. Okay, let's get right into it. So why does everyone pay such close attention when JP Morgan drops a forecast like this one? What's the big deal? Well, it really boils down to two things, their track record and just the incredible depth of their research. I mean, these guys look at everything, consumer spending, corporate debt, global politics, the whole shebang. And that gives them one of the most comprehensive and frankly historically accurate forecasts out there. So what's actually driving this whole tactical bull idea? Well, it all starts with the incredible and maybe even surprising strength of the American consumer. Get this, since late 2019, U.S. household net worth has surged by an incredible 52%. I mean, just think about that. That is a massive amount of wealth created in a really short amount of time. And that surge brings the total household wealth to a staggering $57 trillion. That number represents just an enormous amount of potential spending power, basically waiting in the wings to fuel the economy. And this stat right here just brilliantly illustrates the point. The amount of actual cash just sitting in checking accounts is more than 3 times higher than it was before the pandemic. And this is so important because it means Americans aren't just wealthy on paper. They have real, accessible cash that they're ready to spend. Okay, so we've established consumers are in a really strong position. But what about the other side of that coin? Let's take a look at how all that strength translates to corporate America's bottom line. Because, let's face it, a healthy consumer is really only half of the story. Now, this is where it gets really, really interesting. Just look at the gap between these bars. JP Morgan is forecasting that profit growth is going to more than double revenue growth. And what's the main driver behind that? You guessed it, AI, which is making companies way more efficient. And this corporate health isn't just on the surface either. Despite all the fears of a downturn and higher interest rates, companies are actually managing their debt really well. Default and bankruptcy rates, they're sitting at nearly half their long-term historical averages. We're just not seeing any signs of widespread distress. So, strong consumers, healthy companies, what could possibly go wrong? Right? Well, this is where that conditional risks part of the report comes into play. JP Morgan is flagging 4 major threats looming on the horizon. And here they are, the 4 big worries. The biggest one, they think, is a potential correction in the AI hype cycle. After that, they're keeping a close eye on any political pressure on the Fed, the chance of another nasty wave of inflation, and of course, the dreaded possibility of stagflation. And this slide really highlights how the market's biggest driver is also one of its biggest risks. Just look at this. During a recent market correction, a basket of AI stocks fell almost twice as hard as the broader tech market. It just goes to show you that any bad news for AI could hit that sector particularly hard. So with both the bull case and the bear case on the table, that brings us to the playbook. What do you actually do? Well, JP Morgan provides a really clear 4-part strategic framework to navigate the year ahead. Now, this isn't a list of hot stock picks, okay? It's a strategic approach. First, they say keep AI at the core of your portfolio. Second, broaden the rally. Diversify into other sectors that could benefit. Third, start looking for global opportunities. And finally, hedge your portfolio with assets that could protect you against a weakening dollar. Things like precious metals. So let's try to bring this all together. If there is one single thing you should take away from this entire report, what is it? At the end of the day, JP Morgan's outlook for 2026 is one of cautious optimism. The fundamental building blocks are there to push the market higher, but the journey there is probably going to be pretty bumpy. The key takeaway is to stay invested, but to do it with your eyes wide open to all the risks. And really, that's the key question this whole report leaves us with. It's not about being bullish or being bearish, it's about being prepared. How do you position yourself to capture the upside while making sure you're resilient enough to handle that inevitable volatility that's coming?